Yeah. From the mountain to the ocean, from the window to the lake. On the night, we do it a heaven stand. From the mountain to the ocean, from the window to the lake. Yeah, we go to grandma's house and now we get clean down. If we don't go, grandma got our work high. You know my grandma, she like to pour real sour. Oh, I love my grandma every young. We do it stand. From the mountain to the ocean, from the window to the lake. Oh, we do it stand. From the mountain to the ocean, from the window to the lake. Vamos in everything we still on us, the rest of them die. We didn't drink and we say no. I got to die, you know how I all you can. Ooh, that's you. From the mountain to the ocean, from the moon to the lake. From where? From the mountain to the ocean, from the moon to the lake. Wow. From the moon to the lake. Oh, yeah.
Good morning, everybody. Get started here in about 3 minutes.
Make it a strong one, we're gonna have some fun. I wanna be the castaway, leave the world behind. Take a tropic holiday, say goodbye and keep in time. Wasting away on the coast, Pacific Coast and chase the line. Easy living down in Paradise, walking down. Make it a strong one, we're gonna have some fun tonight. Yeah, the devil, they're gonna cast away tonight. State of mind, think I'm never gonna leave. Rather stay and watch the waves move the sand beneath my feet. Banging on the radio, they go and keep them out. Easy living out in times for me to know. It gets strong, but I'm gonna have some fun tonight. Order, you know, that's the way tonight. Yeah, so. Like we all, it's time flies back, so maybe stepping in the living room. Stuck in the past, fast as the world. Fast as the reality sister me. Oh, the man got away. Good time. Got away. Oh, baby, that's the way. Get strong. I gotta have some fun tonight. Baby, you got the way. Don't just like the other one. Gas away tonight. Gas away. Sunshine. They get strong. See when the night. Gas
Wow, it's time to get started. Good morning, Happy New Year to everybody. I'm gonna try to start off with the video on, but we may turn it off if the computer starts running a little slower. I hope everybody enjoyed their holidays. We're getting back on track, getting back on schedule. There are a few folks that are still considering the sale and the promotion. The team has agreed to extend it just another day. So if you have questions or comments about the promotion, the sale that we had for the end of the year, please reach out. Okay, you can go to admin@themarketinstitution.com and reach out to the team, and they'd be happy to take care of you, or reach out in the chat, and they can also help you out with that. All right, so it is the first day of 2026, first trading day, 2026. Yesterday was the first day of the year. Things to consider. If you have your Stock Traders Almanac, make sure that you're doing some research on how the new year starts. Okay. Now, what's kind of unique about this one is that the first trading day of the year is on a Friday rather than a Monday. So as traders come back from having a day off, there's a lot of hedging, a lot of unwinding of hedging. We're starting off as an inside day where we can already expect things to be a little choppy on the equity indexes. Okay. Now, inside day, and as we go out to the charts, we're going to look at the volume. Okay. Volume is picked up a little bit, but it's still very light on the Dow 30 stocks. Okay. Light volume. S&P still only has 133,000 contracts traded. That's very light. Why is this important? Well, the light volume and existing economic reports coming out. Oops, get the right one up here. PMI at 945, construction spending at 10 o'clock. Okay. Remember, all throughout the new administration that started in 2025, at the beginning of 2025, anytime we had a single economic report, we got bigger volatility, big price movement on the announcement. When we had multiple economic reports reporting at the same time. We had a delayed reaction in the equity indexes. Okay. Just things to keep remembering because we're going to start off this 2026 by documenting a lot of these things that are happening in the overall marketplace. They help us understand and anticipate market conditions based on past behavior. Okay. And we're looking at averages. We're not looking at absolutes. Okay. So on average, the market. Okay. Hey, Jens, good to see you over on YouTube. Glad to have you there. I hear you're doing some trading with, well, actually, you mentioned you were doing some harmonic trading with some of the things that Scott Carney was teaching. So that'll be pretty cool. Okay. It all ties together. All ties together. Now, if you use the harmonic structures and you look for the leg base over on the left-hand side of this, the Fibonacci measurements and the leg base, they all tend to tie together. So that'll be a fun adventure for you. All right, let's see. So another thing that I observed over the holidays is there were so many tips and tricks posted on social media on how to trade. Um, get into training the eyes, okay? It's time to get into training the eyes on what to look for. And all those tips and tricks are great if you understand the map, you understand where the markets are, what the markets are planning to do, okay? Train your eyes on why price change direction and use those pieces of information over on the left-hand side of the chart, referring to the leg base group of candles. We have had several new students start to come in to work with us, and I will be coming back to some of the places that we started with in using the leg base group of candles. Okay, we kind of went from basic to way advanced over the last year, so we're going to dial it back just a little bit, start retraining the eyes. And as I was doing that, going back and looking at picture perfect past trade setups or trade setups that I desired, we find that the leg base is there. Okay. And anyways, let's get started on today. We did have got crude oil. Okay. Crude oil looking at a wide Globex range. And with a wide Globex range, as we mentioned in the chat, okay, you need to be prepared for the bull trap or the bear trap. Okay, so we have the Globex low, and let's just take a look over here. And the Globex range is wide, so we're going to go over to the left and look for a leg base group of candles. Let's put those little blue dots on there just to help us out. Yeah, it looks like we do have one right there at the bottom. So we have a leg base group of candles. And we'll use that as a place where we're going to look for and anticipate some unfilled orders. Okay, and that's slightly below where price is currently trading at. Okay, so as I'm going to set this up right away. This is where we're looking because the crude oil just opened. Okay, and we're going to look for the bear trap. Okay, and I'm just going to start off with I'm going to start off with 2 micros over here. Okay, because I do have to place my protective stop just below that area. Okay, so I'm going to place an entry to go long, 2 micros, and I'm going to place my stop at 56.60. Now I'm going to add on to the position. Okay, so as price drops into what I'm anticipating is demand with using the leg base, we still must manage our risk and protect our capital. Okay. So entry 56.76, stop loss 56.60. I'm just starting off with a couple micros. Now, if this in fact turns out to be the bear trap and price starts to move back up, I will look to add on to that position once a fair value gap has shown itself. Okay. So we can start off with a relatively very small position. Okay. Now, what is a small position to you? Okay. That's what's really the question. In your trading plan, you should have a maximum risk per trading idea that you're going to put out there. And then use about half of that capital to start the trade. Example, in this, I would anticipate taking about 300 in my trading plan. Okay, and it's not your trading plan, it's mine. Okay, anticipate about $300 risk per trading idea. I will use no more than $150 of that 300, half of it, okay, as my initial entry. Okay, my initial risk. So that will help me size the position. Now I've just taken a 2 micros on here, just as a very small position, and I'm anticipating price to go back up above the Globex high. 58.20 would be my profit potential. Okay, my risk will be down about 56.60. Okay, now should price turn out of this area and start to make a new fair value gap to the upside, that'll give me the permission to add on to that position. Okay. Natural gas, we already started to participate, and it looks like I'm almost stopped out of this one.
Order.
There we go. Not the best way to start it, but what we can see and what I was anticipating is that natural gas right now has been in an accumulation area. Okay. Now this is probably the most difficult place to participate in any trade is when the price is going sideways. Okay. It becomes kind of anybody's guess. I did have evidence of a fair value gap and had my stop in place. Okay. I was anticipating price to move back to the upside. Okay. The Globex range compared to the daily ATR is narrow. Okay, so we're expecting some sort of trend to manifest on natural gas. Okay, now my expectation was price to move up. Still may move up, but I may have to wait for another opportunity. So let's come back. We got S&P. Each one of the equity indexes is an inside day today. And all that means is the Globex range is inside the prior session's range, has not broken above or below. Now, inside days can be choppy and designed to take your money. Okay. Inside days often have a little more volatility. Oops, where am I at here? Inside days have a little more volatility. There we go. And it can be a lot more choppy conditions. But we can also anticipate the potential of a gap fill. Okay. Now, very often on an inside day, where price has not broken the high or the low of the prior session's range, the gap fills. Okay. And as we are observing this, if the gap is going to fill as we're anticipating, then price needs to come way back lower. Right now, markets are looking pretty bullish on light volume. We currently have 12 Dow stocks that are positive over 94 cents on light volume and one negative. And that leaves us with what leaves us with 11. So 11 times 2 would be 22. Cash market here says futures fairly priced should be at 22. S&P futures are trading at 34. Currently, S&P futures are about 12 points overbought relative to the cash market. Now, why is that important? Futures are a derivative. They follow the cash market. They don't lead it. The cash market dictates where the futures price will be. Okay. And we're still looking for that gap fill. So 12 points lower right now would put us about 15. And that 15 mark is going to put us right into this area here. Very light volume price move up, what we refer to as a pocket of points. Okay. So the downside, we should look for some acceleration in price to the downside once it gets into that range. Okay. Right now we just have price bouncing off of that fair value gap on the S&P. NASDAQ, okay. I took the long on the S&P earlier, okay. So let me off of that fair value gap, caught a little bounce, okay. Remember,
Order filled.
part of what we're looking at this morning is the inside days can be choppy. And we look for short-term profits. Okay. Well, thanks, Kenneth. Let me look at that. Yeah, I was kind of all over the place, kind of watching where things were moving this morning. So Dow 30 stocks picked up after the end of the year. We're looking for short term. Let's see, still much gold. Yeah, we're looking for the very short term gains on the equity indexes today while we're as an inside day. Okay. Not looking for trending markets.
Order filled.
Okay. Yeah, it's just a little choppy, but it's a great question. Thanks for posting that. So I took a small profit off a couple micros. It was an entry off the fair value gap. But as price failed to continue to rally and futures are 12 points overbought relative to cash, I just grab my $100 and get out of the way. Okay. Now, please ask those questions. Those questions are very relevant. Okay. We are not just here to trade and wow everybody by trading ideas and things like that. We're here to educate. Okay. So I want to keep the floor open. Everybody can ask questions. The more questions you ask, the easier it becomes for you. Okay. So yeah, thanks for the reminder of taking my short-term profits. Often I anticipate and hope for a trend, but we're not in those market conditions. One of the other things that I mentioned in our pre-market routine here was the AMD approach, accumulation, manipulation, distribution over the Asian, London, and New York session. So for those that were here in our last session in our community room, we talked about going out and doing some research on that particular topic, accumulation, manipulation, and distribution. Okay. So what we can see in this arena right here, okay, based on this chart, this is, well, we're still in it. We haven't started the New York session. So this price move is from the Asian and London session where it is expanding. Okay. And that's key importance because when you start blending the two sessions together, either Asian and London or London, New York, Asian, you start to see that when there's that accumulation, then the manipulation, and then the distribution, it helps you anticipate what the conditions may be throughout the opening of the session and throughout the rest of the New York session as we trade it. With the expansion of the S&P in the Asian and New York session, Asian and London session, most of our volatility is going to happen here at the session open, where we still have that overlap between the London and the New York. Okay. But as the London markets close, I would expect everything to kind of come down and flat line, making it very difficult for trading because you're just going back and forth. If we have not broken the range of the prior day, it would tie right into that. So the active session today going to be between 8 a.m. and 11 a.m. Eastern, where we're going to look for our best trading ideas. Now, we have our NASDAQ. Let's bring that out. NASDAQ is coming back into a fair value gap. It's going to be a little tricky trying to take it short if you're looking at the small time frame. Okay. We do have a large pocket of points, a large price range for pocket of points, where price rallied up on very light volume. Okay. Then NQ is an outside day where price went traded outside the prior day's trading range. Okay. But now that it's back inside, we're still looking for the potential of the gap fill, and that would be back down much lower. Another key factor to watch, the daily chart up in the upper corner here. Where is price relative to the 50-day moving average on the NQ? Okay. Where's that price? If price starts trading back below the 50-day moving average, okay, and currently the 50-day moving average is about 648, 25,648, which is just above where we are now, okay? So price trading back below it can get very volatile. We'll see if the price is going to be defended on a 50-day moving average. The Dow, an inside day, price also coming back down to a fair value gap on the 20-minute chart. Inside days can be choppy, difficult. Better trades are taken a little bit later in the session, not around the session open. And we're expecting that gap fill. Okay. Now, fair value gaps are a great place to catch some bounces in the context of trend. And also consider what we talked about earlier. What happened during the Asian and London session? Was it expanding or was it trading sideways? Okay. See, when we start looking at, like, here's a great example of this right up in this range here. Okay. During the Asian and London session, prices were relatively quiet. Then in the New York session, we got some good volatility. When we have that good volatility in the Asian London session, often the New York session can be quite choppy. Okay. All right. Let's see. We got Russell. Russell, also an inside day, anticipating the gap fill. Russell's daily ATR is 34. The Globex range is about 19. So the Russell is an inside day, and the Globex range versus the daily ATR is about the middle. That also invites a lot of choppier market conditions. Now, I'm giving you some very specific information about how to use this yourself. Okay, we're using Globex range compared to the daily ATR when we're about that middle, between about 40 and 70%. Okay, the conditions are much more choppy. Okay, I think we just got hit on crude oil. Stop loss is in place. We got 2 micros and $32 risk on that. Okay. So let me come back to this. When the Globex range is about 50% or between 40 and 70%, often the start of the session can be very choppy. Okay. One piece of information. Russell is an inside day. We often look for the gap fill, short-term profits. Okay. We expect choppier market conditions. Now, if you were to look at this and start to visualize what that might look like, you can see that we have a small resistance here. And in a perfect world, we look for price to kind of bounce around as it comes down and then making that slight higher low. And you start to visualize, well, what are some of the possibilities that price could do? Okay, going to the left-hand side of the chart. Okay. We also look at the conditions around this, around our expectations. We also have very specific entries, either using a fair value gap to enter the trade within a trend, or we're using a leg base group of candles within a buy territory or sell territory for that trade opportunity. Okay. As we keep getting closer to the open, we're about 6 minutes there. Okay. I want to bring up, where are we here? There we go. Some other things to consider. Dollar has been rising in the overnight session, kind of going sideways the last 3, 4 hours. There's a discrepancy with the 10 and the 2-year yield. Okay. There was also some big news about $74 billion in the reverse repo markets. Okay. So the Fed had to step in and save the bank $74 billion. They were out of whack. Okay. Now that's quite substantial. So that news is not something that everybody follows, except for the big players, they do. They realized that they were way on the wrong side and they had to go to the repo markets to borrow money to balance out their mark-to-market accounting. Okay. So that's a huge number, especially when the repo market was almost dried up and the Fed had to inject into the repo market enough for them to borrow to balance the books. Okay. So there's a lot of things under the surface that are very concerning about these market conditions. Volatility index in the pre-market is pretty much flat. And another red flag here is the NYSE trend. And this is the pre-market reading on the trend is at 0.22. Anything below 0.60 is trend is low, time to go. Okay. Trend is high above 2, time to buy. So the markets have been moving up and the trend is very low. This tells you some big banks and institutions were selling in to the move up in price today. Therefore, all of this ties in to what we're expecting as inside day, potential of the gap fill, and so on and so forth. The Asian session, London session, and then going into the New York session. I anticipate the end of the day or the latter part of the day on the New York session to be really choppy and sideways. So our best trading opportunities are going to occur in this overlap of the London and New York session. So who knows when the London session closes? Because that's going to be important. That'll help you with the parameters of the time frame for what you're looking for in trading. Go ahead and type it in there. What time does the London session close in New York? Little trivia there. All right, let's move on. Crude oil. Well, we've got a little bounce. Okay. We're going to wait for a new fair value gap to be established and look for price to push back to the upside. One of the reasons we went long on that around the open is the Globex range compared to the daily ATR. The Globex range is wide, greater than 70% of the daily ATR. Therefore, the bear trap and the bull trap become active. That is the first demand zone or fair value gap area below the Globex low or above the Globex high. We look for that trade opportunity. Okay, nat gas, still chopping sideways, making an accumulation. The accumulation phase leads to a breakout phase, and then we have the spring reversal. Gold, just getting a bounce off a fair value gap. This is the first one. There is a smaller one just below. I'm going to be a little more conservative on it. You can see that there's a base rally. There's a fair value gap inside of that. We did get some buyers stepping in at this first fair value gap. I think we're going to see more around this area here where price started the origin of the move. Okay. We can also see that to the downside, there was a big drop in price. Price had already tested that fair value gap and then continued a little bit lower. Okay. So let's target for gold. We're going to target a bounce around 4,363.80. And we'll have our stop loss in place. Now I may wait for a little more confirmation on this, meaning I'm going to wait for it to come down to this level. I'm not going to set the trade up ahead of time. Gold tends to overshoot some of the zones, so I'm going to look for confirmation of a turn. All right, we are live and ready to go. Equity indexes or the exchange traded funds as we bring them up. We have a breakaway gap. Now, knowing the different types of gap, with a breakaway gap, we often see price come back and fill about half that range of the breakaway. Okay. So price is moving up now on the equity indexes, kind of a squeeze. Let's see what we have as far as a trade opportunity. Nice little bounce off the fair value. Let's look on the smaller time frame, 5 minutes. I turned off my camera because this screen's freezing a little bit. Price used the fair value. Nice little bounce off of that. The price did not, well, I guess it did go back up into a leg base group of candles. Really close. NASDAQ. See, with the overall picture, inside day on the S&P, Dow, and the Russell, we're expecting a gap fill. Okay. We have a daily fair value gap at 25,793. $793, okay, on the NQ. The tick opened up in a buy program. Remember, on light volume, the gap price up and they were selling into that move. Okay. Remember the trend reading. Ooh, Dow's already filled the gap. Okay, let's see. Filled the gap. We're in the leg base. We'll drop down to a smaller time frame. That's not good. Wow, major reversal. And there is a leg base group of candles right down in here.
Order filled.
Starting off with small contract size. Stop loss at 48,314. Nope, taking out the prior session's low.
Order filled.
Okay, and now I'm going to set the trade up Let's look over to the left. Okay. 48,255. 225, excuse me. See, taking small position size, and now we're an outside day. The small position size didn't wreck my whole trading day. Okay. Because I just got stopped out. That's all. Okay. And here comes the S&P coming around the far outside. We are expecting that gap fill. We are just getting into that pocket of points. First bounce, we should look at 6,907 and look for that long somewhere around 6,900 area. Let's see if we have a way to get into that. Wow, that would have been a beautiful. We got a nice little bounce off of the 915. We have economic report coming out in 10 minutes. Take a look at the stocks. Stocks again trading on light volume. And banks and institutions were selling into the move. They weren't buying into it. We got that reading off of the trend. And we're just dropping down to some smaller time frames to see where we could find a way to get into the trade. Price just did bounce off the 50-day moving average. Oh, we got the Dow again. All right, let's get our stop loss on the Dow. $121. Now you can wait for a little confirmation if you like. Okay. Remember all the equity indexes what we've been talking about this morning, okay, have been looking to fill the gap. The gap fill. Inside day gap fills happen most often the time. Okay, most of the time. Okay. High percentage of the time. Trying to get the right words out here. But we are getting some little bounces here. Also want to point out daily chart on the S&P. Notice where the 50-day moving average is. As we pointed out, where the 50-day moving average was on the NQ. Wow, look at it bounce off of that. Beautiful move. Remember, we talked about the inside day being choppy and volatile, designed to take your money. Okay. See, there's a lot of lessons in every one of our live streams, every one of our live trading sessions. There's lessons to be learned to understand market conditions. Okay. It's not just about a couple of candles on the chart. It's about looking at the overall picture and understanding where banks and institutions have unfilled orders. I don't catch every trade, okay? And that's kind of the difficult part about all this is we can call out levels, okay? But getting into the trade, managing the risk, that does take a little bit of work, okay? So we are still long crude oil. Nothing has been violated, okay? We're waiting for a fair value gap to the upside to add on to that position. We took a test of the zone down here on the Dow. 48,225. This is a leg base zone, and we do have a prep screen zone a little bit lower. The Dow started off as an inside day, did fill the gap. Russell? Dang it, always miss that Russell. Russell went all the way down, filled the gap as well, and getting a nice little bounce back up. Russell found some buyers here at the leg base group candle. A little more proof with the gap up and what we saw on the internals. The trend was high in the pre-market, or sorry, the trend was low in the pre-market. Okay, that was a clue. They were selling into that move. Okay, but that doesn't always mean we're going to capture every trade. Nat gas still in accumulation. Gold.
Order filled.
Jump right into gold, and I'm going to use 43.60 as my stop loss. $174 risk on the trade. Okay. This is a rally base rally. You also have a leg base. That should probably give us a little more wiggle room. But with gold, I'll catch the move back up if I am stopped out. First test of the zone is always a place you can take an aggressive entry, and then you can drop down to a smaller time frame and look for the opportunity for a fair value. Look for, excuse me. Good. Come on, charts, line up. Here we go. All right, we do have a smaller time frame. We can look for the fair value gap if price continues to move up. All right, we do have a leg base. Picture of a rally, a base, and a rally, and we're just looking at that retest at the origin of that move. See if there is potentially some unfilled orders there. But I'm staying within my risk parameters. Okay. All right. Looks like S&P is still going down to fill the gap. Now, if you're feeling a little confused and all over the place, okay, most of the time you're going to have those feelings. They're going to be stronger, okay, when we're in an inside day. Okay. So don't let anything play off, okay? Don't let your emotions run wild like you're missing a trade, especially when you notice that we're in an inside day on the equity indexes. Okay. Just go, man, things are going to be choppy, things are going to be volatile. The light volume along with that is going to expand things. Okay, let's check a look and see if futures are at fair value, overbought or oversold, or at fair value relative to the cash market. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 17 down stocks, negative over 94 cents, and 6 positive. That leaves us at 11. 11 times 2 is 22. Right now, cash and futures are balanced. We need futures to be oversold relative to cash or overbought relative to cash in order to have a trade. Now, I just give you a math calculation there, okay? Putting together using the Dow 30 as an odds enhancer, cash and futures are balanced.
Order filled.
And we just talked about the emotions, okay, in trading. When cash and futures are balanced, there's really not a great opportunity to make a trade. Okay. Need to come back on gold. I do think gold is going to continue to go back up. I need to give it a little more wiggle room here. I'm gonna come back in long at 63. Okay.
Order filled.
And 57 being the stop loss. Gold has this personality, and you have to be prepared for the little overshoots. It is a bigger product to trade. So it does have a little more emotion involved in it. Target for the gold trade, the entry. Looking at the origin of the move down, we have a fair value gap, 43.97. Okay, we have another one just above. This could be the first target for the bounce. That would get my initial loss and a gain, about 43.72. Okay. A lot of volatility. We're still in our crude oil. And we got stopped out on the Dow. Dow took out the leg base. And arriving at a prep screen zone. Okay. Yeah, look at this volatility back and forth, back and forth. Let's see what we have. Oh, price coming right back up to that fair value gap. So in our pre-market routine, we need to understand the market conditions. Indexes are close to having wide range. Okay, compared to Globex range to daily ATR, we've been talking about that. With short-term profits starting off as an inside day, expect choppier price move, prepare to take short-term profits and don't hold too long. Okay, so if you've been expecting a trend out of any of this, okay, based on the inside day, okay, you've been getting chopped up. Oh, look at that nice hit off that fair value gap. We're still looking for the gap fill. See, there's so many lessons to learn about this, but as I'm going through a lot of these things, you know, the application of placing a trade when you have so many setups, so many potentials, okay, you might need to focus on one or two products and just stick with that, okay? Trying to trade everything. Right now I'm just demonstrating and watching. I'm trading very few things, okay? We're also showing that inside days can be choppy, designed to take your money, okay? The trades on an inside day are better taken at the end of the, towards the end of the um, London session and so on. Okay. Wow. Must have been some good news come out. Yeah. Go ahead and check that out. Oh, that was the 9:45 PMI report. Yep, we did get some Trump tweets on that too. I'm still expecting the gap fill. There we go. I'm targeting that 43.97. Then I'm going to take some risk off. Max risk is $20 right now. Want to see it take out that little level right there, the drop base drop. Fair value gaps in the way. Okay, that gas is still sideways. Big whipsaws. Did we talk about whipsaws? Choppy market conditions. We also talked about when there's one economic report versus having many that come out at the same time. Price just shot right back up through that dead space. Let's target the a short entry, 25,822 on the NQ. And that 793, 828 area, that is also a fair value gap on the daily chart. And also we have a leg base right in that range there. Yeah, what a reversal on the NQ, huh? Oof. That was some manipulation for sure. Here's what happens with the light volume. We do see that price dip and overshoot the zones a lot. That's why we start off with really small contract size if we're going to participate. Russell just defending the 50-day moving average. Okay. Still got about 2 minutes left for that. See if we're going to build a fair value gap to the upside and take this one out. All right. Coming over a look at some of our other products. Ooh, soybean meal coming right down to demand. Gold on a 60-minute chart. British pound. Nat gas still looking for demand down about 3.497. Let's see what our equity indexes are doing. Got S&P on a 60-minute chart hit the fair value gap. Dow went deep into the leg base. Same with the rest. So other clues that we had on this is when you notice the volume is light in the pre-market, okay, and you also see that it's an inside day, you can often get some of these big whipsaw in price movement, okay? Now you're seeing I'm removing some of the lines. Well, they don't mean anything to me anymore. They're just the ones that are still active, okay? I didn't have a chance to get all these set up. Okay. Now, we are still expecting a gap fill today. And very often the gap does fill the same trading day on an inside day. Okay. Cleaning up our charts, looking for where we're going to have additional trade opportunities. Notice that the moves in price are short-lived right now. Okay. Choppy. Even though we're getting some big price swings, they're not really turning into trends yet. Got resistance. Price gets above the resistance area going into that dead space. You need to look at a profit target above that range. Huge whipsaws. Mhm. Now the hunt begins. The daily fair value gaps are huge. Okay, as far as very strong evidence of potential of price changing direction. But we didn't get up to the prep screen zone. And on a small time frame, we haven't created a fair value gap yet to take it back down. It's kind of waiting. S&P. What else do we have out here? Not gas, we're looking for that 3.497. Notice we have a drop, a base. We might even be able to participate in the breakout phase. We can see now that we have 3 touches of support. Buyers have been trying to hold price up. And potentially could be moving into the breakout phase. And we would target that 497 area. Oh, look at that. Nice little leg base, leg base. Okay, so we're looking at a potential for the breakout on the nat gas. 3.562 target 3.497 area. Well, define what works, okay? A question, with all the fair value gaps, do you have any idea what percentage of the time they work? And there's a way to filter some of them. Most of the ones at the extreme levels, the start of them are the ones that are the strongest. Okay. If we're looking to splice into the move, okay, what does it mean to have a successful trade on a fair value gap? A half to one move out, 1-to-1 move out, 2-to-1 move out. Okay. See, it's kind of an open-ended question. You know, how many of them provide a trend, okay, versus a reversal? Okay, all of those play a part, okay, but we still need to define, what is a successful trade. Now, as we're looking at the fair value gaps on some of the equity indexes here, okay, getting into the trade in the direction of the trend, okay, we're splicing into a trend. We're not at a reversal, okay? And we also have conditions which are an inside day, okay? So I'm not trying to downplay the question. It's just that we don't want to lull ourselves into a trap. Now, I'm seeing that there are some unfilled orders just about every time price hits a unfilled gap, okay? But there are other influences outside the price chart that give it the momentum or the push. Okay. Like right now, the S&P futures are trading at 45. Okay. And we have now 8 Dow stocks up. One, two, three. 8 Dow stocks up and 11 down. So that means we have 3 negative. 3 negative times 2 is a -6. So right now, cash equals -6, while S&P futures are trading at +43. S&P futures are about 37 points overbought relative to the cash market. Okay. Now, this is not to distract from the question. Okay. It's just not a quick, straightforward. Yeah, well, the fair value gap works 88% of the time. No, it, but based on what? Okay. Is it based on a 1-to-1 move, 2-to-1 move out of that? Okay. Does a fair value gap work better when you look at the preceding price drop or rally? Okay. See, depending on your trading style and market conditions, we're still an inside day. And some of our rules that we have here at the market institution is that on an inside day, We look for zone entries only. Okay. Fair value gaps are a little more elevated risk. They can provide short-term profit trades, but getting out is almost as challenging as getting in because you're always hoping for the run. Okay. But an inside day, we get a lot of chop, whipsaw, back and forth, not such. So their probability of the inside or a fair value gap working is very high. Okay. And it is higher on certain time frames, mainly because it is a very popular technique right now, a technique for entry. See, there are three parts to it. There's more than just one part to trading. There's the overall picture, what we're looking at on the price chart. Okay. Whether it's an outside day, inside days, supply zones, demand zones, trend. Okay. All of those are playing a part. Okay. As to the success of that potential trade. Now, statistics will show us over and over again that when price starts off inside the prior day's trading range, we have a very high probability that we're going to fill the gap the same trading day. Okay. So, not to give you such a long, vague answer, okay, is I utilize fair value gaps for an entry, but based on market conditions. Okay, so we have the price chart, we have market conditions, because futures always follow something. That's why we have to anticipate the market conditions. Okay, so futures follow their derivative. Okay, we utilize the information outside the price chart as well as on the price chart. Fair value gap is an entry and risk management trade opportunity in the context of a trend. Okay. On inside days, markets are not often trending. Okay. Now, we didn't know it was an inside day until the market opened. Okay. But the overnight session, if it's still within the prior day's trading range, we consider those market conditions to be non-trending. Okay. And just kind of stuck in a range. Okay. So the information we gather on the chart, outside the chart, brings us to how we will execute on a trade. Now, we also understand in the prior context that inside days bring an extra element of risk. Okay. And they also bring some parameters around whether you're going to take an entry within a supply zone or a demand zone. Okay. So I do like the question, and you're on the right track. Okay. But you're asking me a trading question. Okay. It's not always easy to answer a trading question. Okay. I can tell you how to properly execute a trade, where to enter it using a fair value gap. Okay. And how to manage the risk based off of the strategy. Okay. But that doesn't always match up with your trade plan. Okay. For example, let's look at the S&P right here on a 5-minute chart. S&P is still an inside day. Okay. We do have a fair value gap down below. If you're of the opinion that we're in a trending market and the market's going to go higher, then your entry is going to be at the proximal line, 69.29, let's call it 3/4. Now, your stop loss, according to the fair value gap strategy, okay, is going to be down at this last pivot low. You're going, heck no, I'm not doing that one. Okay, well, wait a minute. The fair value gap potentially will work. Doesn't mean you are willing to take the trade based on the risk. Okay. So there's this is where a lot of traders can get themselves into trouble by just looking at charts and not considering what's going on outside the price chart. The fair value gap is not a zone entry. A zone entry is a leg base group of candles. Okay. Fair value gaps have less probability of working when we're still an inside day. Things are very choppy. Okay. Great question. Great question. It's just I want to give the element to help you understand it. It's not like, oh yeah, just give you some specific statistics on how often it works. Okay. But see, those statistics may be lacking the environmental odds enhancers that we need in order to, and the characteristics of what we need in order to place a trade. Now, coming back to that, S&P still an inside day. I'm still expecting the gap fill. I need a zone entry in order to participate in the trade. Now, that zone entry, here we have a leg base group of candles. Price came back up into that leg base. It also came into a fair value gap area. So the trade worked twice to get a nice move out of that area. But I would have had to risk more than what I'm willing to risk. It was outside of my trading plan. So that's the last element. Okay. You have to have that price where you're looking, where your trade idea is going to meet what you expect. Okay. So environmental, big picture to small picture, how you analyze a price chart, to how you're going to analyze your entries based off of those market conditions. Zone entries only when price is an inside day. Okay. Fair value gaps can be run a little higher risk because the market's not in a trending environment on an inside day. Okay. How will you execute on the trade and place your protective stop loss? Okay. Based on the leg base, based off of fair value gap. Okay. And does that overall trading idea and the risk management you must give to the chart, does it fit within your trading plan? Okay. See, this is where a lot of folks are going to get themselves in trouble starting off this new year. One of the things I pointed out in our pre-market prep is that there was a lot of the magic that was going on in the social media this weekend. Everybody was trying to push their products, okay? We need to take in consideration that it's not just the price chart, it's environmental, especially with futures. Futures are a derivative instrument. They follow the cash market. So the cash market that's most easily to identify would be the Dow 30 as an odds enhancer. The Dow is the only price weighted index. The S&P, the Nasdaq, and the Russell are based on market capitalization. So when we're looking at a trade opportunity on the NQ to go long or short, I'm also monitoring what are the top 8 large market cap weighted stocks doing. These large market cap weighted stocks on the NQ for market cap weighted index, okay, these ones here in particular control about 47% of what the futures, the Qs, okay, the exchange traded fund, what they do. Okay. So I'm looking at a 5-minute chart on the large market cap weighted stocks. What are they doing? Are they continuing an uptrend? Are they looking a little bearish? Okay. So the cash market looks pretty weak right here. Amazon, Microsoft, Meta, all pushing the lows. Okay. Tesla is getting close. Google, Nvidia, Apple, and Broadcom are still deciding whether they're going to come back and try to fill their gaps. Okay. So when you're looking at futures, stocks move first, followed by the exchange traded funds, and then the futures adjust based off of that. Always remember futures are a derivative. So this is what controls what the price of the futures are. So if the stocks are starting to go lower and break lower lows, futures will have to adjust to that. Now, for the S&P, all the Dow stocks trade on the S&P 500. Okay, so S&P and the Dow have the highest correlations together, basically a 1 to 10 relationship. As we start looking over the Dow 30 and using it as number of Dow stocks that are greater than 94 cents negative and greater than 94 cents positive, we can net the results. So currently we have 6 Dow stocks that are positive, 1, 2, 3, 4, 6, 7, 8, 9, 10, 11, 12 that are negative, 6 that are positive. So we have 6 negative as a net result. Multiply that by 2. That'd be negative 12. Cash equals negative 12. Futures are trading at positive 20 or 18. Okay. So futures are still approximately 40 point S&P futures, 40 points, negative 12. Yeah, 40 points overbought relative to the cash market. Now, why is this important? Well, cash and futures often balance out in the first hour, hour and a half, or first 30 minutes to hour of the market. Okay. Everything else was hype, just trying to make a market. Right now, cash equals negative 12. Futures are trading at positive 17. So it's got to go down 17 points plus another 12 points in order to be at fair value. Inside day, we're expecting the gap fill. Okay. Now, that doesn't mean we're going to have an entry to go long or short. After all, we have to use a zone entry. So as we are looking for a zone entry to go long inside day, we have a couple down here where we're projecting. We do anticipate that gap fill, and that's visually see that on the price chart. Okay, we see that there are a couple of fair value gaps being created, which will be headwinds when we start moving back to the upside. And we still have about 3 minutes for that one to fill out. So as you can see, as long as you guys keep asking me questions, I have the answers. Okay. That doesn't mean we're going to have a successful trade every time, but we do have the picture. I can explain why things are happening for you. Okay. This is very important to a trader's journey, is being exposed to understand the market conditions. Okay. As we get further and further into what's going on here, we start bringing in other techniques that have been time tested and been around for well over 100 years. Okay. And these are trades like we would use with W.D. Gann, with Richard Wyckoff, with Ralph Nelson Elliott, Elliott Wave, okay, H.M. Gartley, Gartley patterns, and so on. Okay. But still, we have technology that they did not have, and that's the price charts in real time. Okay. It's the same picture, it's the same stuff over and over again. We started off today calling for a gap fill, and you probably thought I was really full of it at that point in time. Okay. And as price starts making its way down to that gap fill, now you're going, well, wait a minute, there might be something into this. Now, it's not, it's not going to happen the first time you see this or understand what I'm talking about at this moment. It's going to take time to be able to witness it several times. Then you incorporate what you witness into your probability analysis. Okay. But all of that has to be led with how are you going to execute on this trade? How are you going to manage risk? What is your trade plan for risk? Okay. You know, how are you going to manage that? Okay. So, it was a great, great question. And the more questions you guys ask, the more I can explain it to you. It doesn't mean you're going to get a successful trade. I don't want to put that out there. Okay. But we will start to mark levels where we have a higher probability. We can say that, you know what, I'm willing to say, hey, I've studied this. I anticipate that gap fill. Okay. Am I willing to risk that dollar amount on a trade? Okay. Now, since we're expecting the gap fill, okay, there's going to be a couple of areas in between where we can expect a bounce, like what we're seeing right now. This is a leg-base group of candles. It's if you could drop down to a smaller time frame, you might even find it to be in a buy territory. Okay. But the other conditions that we're looking for are that the gap fill. Where is that? Okay. We're also still in inside day. Inside days are very volatile, very choppy. We had the Asian Asian session expanding, the London session manipulating. Okay. And now we're looking for the distribution of the New York session, just on what we have on the price chart here. So that's going to make that entry down below. And what if we can coincide that with the bottom of the hour? So what you opened up was a big can of worms, Ken. It's a long explanation, okay? But we have to remember there are several things that we're looking at, okay? And then we have to apply the trade. You see price just dropping right here. Do we have any news that comes out? Well, I thought the PMI number was good. Yeah, but we're missing a lot of volume. Banks and institutions are stepping aside. They're not buying yet. They're manipulating price down to make you feel fearful. Okay. Let's place this trade out there. Let's now move to the application. We're expecting the gap fill. Okay. So I'm going to come in at 68.94. Keep the contract size small. 68.94. Yep. And then our protective stop loss, 68.90. Okay. See, at this point,
Order filled.
we're looking for the opportunity to see if there are some unfilled orders at this point. Okay. We gave you a good narrative, a good idea of where to expect that gap fill. Okay. We acknowledge that we're risking $40 on this trade for this potential gap fill. The first day of the trading year, according to Stock Traders Almanac, is typically an up day, okay, which would go along with some of the statistics of where we would want to be looking for a buying opportunity. But are you willing to take the risk on the trade? The price is just tanking right here. Okay. Kind of scary. Now, that doesn't mean it's going to be a successful trade. But if price does get a bounce, the first target will be to the first fair value gap on the way back up. And we're going to target that 69.08. We use the leg base group of candles to enter the trade, zone entry on an inside day.
Order filled.
Oof. We're missing a lot of volume. Now you may be going, well, why didn't you take the trade short? I didn't have an entry to short. What rules do you have to enter short? Just hit the button? That can be a little tricky sometimes. All right, I did get stopped out. I lost 40 bucks. That was within my risk parameters, and there is a leg base just below it. Okay, so I'm going to give this another shot. We did fill the gap. There is really no news out there that's saying, hey, the market should be dropping. My stop loss will be at the distal line, 68.88. Looking for that entry. Okay, acknowledge what you will have to risk on that trade. Are you guys following along with this? You doing okay with that? Thank you, Miss Fay. Yep, London session ends at 12, or yeah, 12 Eastern. All right, this is going to be a good one.
Order filled. Stop loss, 80. Now, each time you get into a trade, make sure that you acknowledge the risk on the trade. Now, you don't have to enter where I entered. You can wait for a little confirmation. What would that confirmation look like? What rules do you have you applied in order to execute on a trade? Okay. Right now, we're looking for target 69.08. Have we broken outside the inside day on the S&P? Yeah, no longer an inside day. Trending markets can now come back into play. Our futures and cash balanced. Ooh, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 Dow stocks down over 90%, and 5 positive. So 9 times 2 is negative 18. Futures are still overbought relative to cash. So it's like you're entering the intersection and the traffic's not completely stopped. You're taking on a little extra risk.
what will you do to adjust a stop loss? So if I take my stop loss and the size of the zone, when price moves 1 to 1 away, I'm going to adjust my stop loss up to the low of the session. Not going to do anything until that happens. Oh, thank you for that. The things I'm sharing with you are things that I've learned over the many years of trading about market conditions and information here. Okay. These are things that are most often overlooked with new traders. Okay. The more you're exposed to this, the more you'll understand the conditions of the market. See, traders would have been just as frustrated this morning by not getting this whole move down. Okay. And maybe they jumped in and caught a little bit of that momentum. They're feeling good. Okay. But did they know why they took the trade? Did they understand the market conditions were going to be kind of like this? Okay. Now that price has broken outside the prior day's trading range, things can, things can start to work a little bit better. But we do need the things outside the price chart to help us. Apple and Nvidia are two very large market cap weighted stocks on the S&P. Right now, Apple is not showing us any love that it's moving up, and Nvidia is getting a very slow start. We need some help from Apple and Nvidia to start looking at price moving up. Then the S&P futures, being a large market cap weighted stock, will tend to follow. We need to see that there's some buying or selling coming in. And we're not seeing any of that on the NYSE tick yet. We're actually seeing an equal number of upticks over downticks. Now, if this turns into a perfect scenario would be that price reaches an extreme of selling, okay? But as price starts to move up, we want to see that the cumulative tick for the NYSE starts moving up, okay? We also want to see that Apple and Nvidia start moving up. Because right now, all you're doing is watching the P&L. You're going, oh, should I stay? Should I stay? Okay, well, the NYSE tick is coming in positive, but we still have no help from Apple and Nvidia that this is going to continue back up. We also realize by using the Dow 30 as an odds enhancer that futures are still overbought relative to cash. The cash market takes longer to turn than the futures. And people often interpret the futures as a lead indication. Okay. Well, as we are watching our P&L and we have timed our entry, we need to start managing how are there more Dow stocks becoming positive over 94 cents and less and negative ones getting back below 94 cents? That would be helpful. Is Apple and Nvidia showing us any strength or price moving to the upside to support this move? Okay. Are the cumulative ticks getting stronger? That's a positive sign, but we still need help from Apple and Nvidia if we're going to continue up to our first profit target. This is cool stuff. Once you start understanding it, you start going, well, it's just like approaching any intersection. Sometimes you're going to be willing to cross the street when the crosswalk says don't walk, but you're going to evaluate that condition. Then there's going to be times you're not even going to touch the crosswalk, okay? Because the conditions are still not favorable, okay? And this is an understanding. I mean, every time we approach a trade opportunity, it's like entering the crosswalk. Either the traffic is completely stopped and it's very safe, you have the right of way, or you need to wait. Sometimes you'll run across the street, and sometimes you'll jump back on the curb. Okay. Prices move greater than 1-to-1 are a risk. I'm going to move my stop loss to 885. And see what we're bringing in now is we're taking the risk off the trade based off of our trading plan. Once price moved 1-to-1 away, we adjusted our stop loss. We still have a profit target at 69.08. We're getting a nice little move. Getting some help from the cumulative tick. Seeing a little bit of life coming back in Apple. Now, if Apple starts moving back up, as NVIDIA is, that's going to give strength to the S&P. Let's take a look at the cash value. Wow, that's changed a lot. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 Dow stocks negative. And now we have 7 positive. 4 negative times 2 is 8. Cash equals -8. S&P futures are still overbought relative to cash. So when S&P futures are overbought relative to cash, we're looking for price to come up into a supply zone.
Order filled.
All right, now, guess what? That was a very sharp movement down. Price has taken out a fair value gap to the downside, didn't it? And at the same time has created one. We still have about 4 minutes left in creating this one. A profit target 69.08. And then we have another fair value gap. At each one of these fair value gap areas, we should expect a little resistance. What's going to help us anticipate going through the resistance is help from Apple, NVIDIA. You might even look at the SPY and the cumulative tick. We just hit the profit target. What are you going to do now? We're expecting a pullback. You go, yeah, but it's going to keep going. No, you got to learn to take profits.
Order
There we
filled.
See, just when you thought it was going to keep going, we found some sellers. Okay. Now, in utilizing the fair value gap, this candle needs to complete. Okay, this is our third candle. Price hit a fair value gap that was already established, found some sellers. Let's get it out of the way now. It's been used. Okay. Don't be afraid to take the profit. When this candle completes, the next candle, the fourth candle in this sequence, will need to retest to 69.04 in order to have an entry. But then your stop loss is still going to be at the low. Okay. So I hope you've enjoyed our YouTube. We will be live on, well, we won't do live stream next week, but we'll be back to normal. Okay. Kind of working our sessions. We do have live trading room for subscription service on Monday, Wednesday, Friday. We also have our community trading room where everybody has mic privileges. Everybody can share their screen and so on. Okay. So I like the community feel. I want to thank everybody for asking questions in the YouTube channel. Your questions and comments are very important to express you to express them so that we can give you some validation or some clarity behind why we took a trade and why we didn't. Okay. So I hope you enjoyed the session. Hope you learned something, picked something up. If you like what you see, reach out to us at admin@themarketinstitution.com. Okay, we'll be able to happy to help you. We do have a month-to-month subscription. We also have a very big special going on if you want to lock in for the whole year and get about 60% off of that. And then today's the last day for that as well. Okay. Great exit right there. If you use that 810, you knew why you were getting out and taking a profit. Okay. And now we're still waiting for this fair value gap to be created. Okay. We still got 1 minute left in this candle being completed. And we have greatly reduced the risk on the trade as well. And our crude oil is still cooking. Didn't stop us out. So I hope you can see that you don't have to take a big risk on a trade. Okay. You do have to have a plan of how you're going to execute on the trade and manage your risk. Okay. All of those are part of your trading. You know, what are your specific entry styles? Whether it's a fair value gap, whether it's a leg base, okay, when to use them, okay? If you need help with any of those things, just reach out to us and let us know, okay? I want to thank everybody in the YouTube channel for coming in and our students that are in the Zoom session as well. So I'm going to wrap up our session today, and we'll see you bright and early Monday. If you want to join us over in the YouTube, sorry, not in the YouTube, in the Discord room, team, can we post that Discord link in the chat if you want to join us on that? I'll be over there just kind of hanging out, doing my trading. Okay, it's where I go. We're a community of traders. Okay, everybody have a good weekend. It's like we just had a long. Oh no, my screens are frozen, I think. Give me just a second. Always have your batteries ready, huh? Whew. There we go. What a time for the battery to go out. Have a great day, everybody. I'll see you over in the Discord room, and trade safe.